We'll make this show brought to you by the letter E. Lots of E things that we need to talk about. You talked about Elon and earnings, and I can talk about expensive and, of course, the economy. But let's start exactly where Danny set that up. And with the earnings schedule coming out, we saw a number of companies start to report last week, the financial companies. And then we saw a report earlier this week, Derek, that talked about the pressure that Tesla is under.
Yeah, I mean, Tesla gets a lot of publicity. It's a very high beta stock. A lot of momentum investors are very interested in it. And what we're finding out from Tesla is they're going to trade profits for market power. We know the EV market's going to grow dramatically, and they believe they have a cost advantage over Ford, General Motors, and the rest. So basically, they continue to lower prices, and that as a result has caused their margins to decline more than analysts expected, as well as some high expenses. So they missed the earnings number and guided a little bit lower, and that caused the stock to fall fairly dramatically.
You know, and of course, those price drops that you talked about, I think it's been 5 or 6 rounds, including 30% decline on the Model Y. And of course, you know, we talk about so much about Elon and his brilliance. And of course, Danny, you saw, and we've been talking about Elon Musk for a long time, you saw his SpaceX project.
It supposedly was still a success, but Starship, is that it, Dave?
Yeah, Starship.
Bigger than the Saturn V. It went up. It lasted 4 minutes, tumbled over and over, and then what did they call it?
A rapid unscheduled disassembly. Come
nice.
on, what a spin.
That's almost as good as when Gwyneth Paltrow got divorced and it was unconscious coupling or conscious uncoupling. That's what it was. Yeah.
It's the same thing. That is a spin, folks.
Well, can I get back to Tesla for a second?
Sure, of course.
You know, the one thing about Tesla, if you think about it, if you're about to buy a Tesla and you know that they've cut prices 6 times and you think you might sell the car down the road, you have to wonder what that residual value will be. So it could cause some consternation across the EV space, but it's certainly going to make it more difficult for startup companies that are hoping to take advantage of the EV boom, companies like Lucid and Rivian and the rest.
Yeah, they're going to be under pressure, no doubt about it. Let's stay with earnings. And of course, we all wanted to see how the banks did, especially in the light of what happened with Silicon Valley Bank just a few weeks ago. But some of the big banks looked okay.
Well, the big banks did well. They gained deposits. They do a better job of hedging interest rate risks, certainly better than Silicon Valley Bank did. But we've seen some of the regional powerhouses like Zion Bancorp, Regions Financial, and KeyCorp all guide lower, all raise some loss reserves. So, you know, the bulk of this commercial real estate downward pressure is going to hit those regional banks, and they own 67% of those loans.
And so let's look at sectors in that space. And of course, CRE, or commercial real estate, will be part of this conversation, and real estate as a sector will be under pressure. And next week, Derek, we're going to get a lot of earnings from the big tech companies.
Right, and that's going to be important because those 10 names have basically carried the advance of the S&P. They've generated 90% of the gain in the S&P year to date, and by that I mean Apple, Microsoft, Amazon, Meta, and so on. So how they report and how they guide will be important. We did get one little tidbit, though, towards the end of the week about Apple, and that is that sales did fall off towards the end of March and continue to fall off in April. So we'll see what the guidance is there. But generally speaking, those companies are at a higher valuation than the balance of the S&P 500, which is why we've migrated more towards an equal weight strategy than a market cap
There you go,
strategy.
Equal rate, another E word. And of course, we talked about expensive and equal weight. And that's the reason why, and you've done some work here, Derek, is that when you show the earnings of the S&P 500 on the surface, it looks expensive. But
Right. Well, like as I said, when you deduct the market caps of the top 10 and the multiples, they're so. For example, Amazon's at 76 times earning. Meta and Apple are both north of 20 times earnings. That's significantly higher than the balance of the S&P, but they have a bigger disproportionate impact because they're the largest market cap weighted companies in the index. So again, stock picking, picking sectors that make sense and not just chasing high market cap companies, I think is the way to go going forward.